What if I told you that what's happening in silver and gold right now doesn't even make sense at first glance, and that confusion is exactly where the biggest opportunities and the biggest mistakes are being made? On one side of the world, silver prices are falling hard in India, shaking retail confidence. But at the exact same time, global markets are seeing silver surge sharply, up around 7% in international trading, catching traders completely off guard. And while most people are still focused on silver, gold is quietly climbing back above key levels, sending a message that many investors are missing. This isn't just another daily price move. This is a market split, and if you don't understand why it's happening, you could end up on the wrong side of the trade. Before we break this down, make sure you hit the like button and subscribe to the channel right now. It really helps get this message out to more investors. And on Silver Shockwave, we focus on what actually matters in the metals market, not the noise. If you care about protecting your money and staying ahead of big moves, you're in the right place. Now let's talk about the confusion first, because that's where most people are stuck. Many investors woke up, checked local prices in India, and saw silver moving lower. That immediately triggered fear. Social media started filling up with posts saying silver is weak, silver is failing, the rally is over. But meanwhile, in global markets, silver was doing the opposite. Futures and international spot prices jumped aggressively, posting one of the strongest single moves in weeks. This disconnect feels strange, but it's actually telling us something very important about how this market works. Local prices don't always reflect global demand in real time. Currency fluctuations, import duties, regional premiums, and short-term liquidity issues can all push local prices in a different direction, even while the global trend is turning bullish. Right now, the Indian market is reacting to local factors and recent volatility, while international traders are positioning for what comes next. And what comes next is exactly what analysts are debating right now. The big question being asked in trading rooms is simple but powerful. Was this 7+% surge in silver just a short squeeze and a technical bounce? Or is this the start of a larger breakout toward the next major resistance level? Silver is known for violent moves. It doesn't climb smoothly. It explodes, pauses, shakes people out, and then moves again. And this recent jump has all the characteristics of smart money stepping back in while retail investors are still uncertain. What makes this even more interesting is what gold is doing at the same time. Gold didn't explode the way silver did, but that's not a weakness. Gold is rebounding steadily, climbing back above levels that many traders thought were lost during recent market stress. In volatile environments, gold often moves quietly first. It stabilizes, regains key zones, and only later makes headlines. That's exactly the kind of behavior we're seeing now. This tells us something important about investor psychology. When markets are nervous, money doesn't rush into risk immediately. It seeks safety first. Gold is benefiting from that shift. Investors are looking at inflation risks, geopolitical uncertainty, rising debt, and shaky equity markets, and they're slowly rebuilding positions. Once confidence grows, silver usually follows, but with much more speed and aggression. That's why silver often outperforms gold during bullish phases, even though it looks weaker at the beginning. Another factor that can't be ignored is industrial demand. Silver isn't just a precious metal, it's a critical industrial input for solar panels, electric vehicles, electronics, and advanced technologies. Global demand hasn't disappeared just because prices dipped locally in one country. In fact, many manufacturers prefer lower prices as an opportunity to lock in supply. That underlying demand acts like a spring. The longer it's compressed, the stronger the move when it releases. At the same time, paper markets and physical markets are telling slightly different stories. Futures traders are reacting to technical levels, momentum, and positioning. Physical buyers are watching premiums, availability, and delivery timelines. When global prices rise sharply while physical markets stay tight, that usually means pressure is building beneath the surface. It doesn't show up immediately on price charts, but when it does, it moves fast. Now let's talk honestly about what this means for you as an investor, because this is where mistakes happen. Many people chase price. They buy after big green candles and panic sell after red ones. Silver punishes that behavior more than almost any other asset. The people who do best in silver are the ones who understand the cycles, respect volatility, and think in phases rather than days. Right now, we appear to be in a transition phase. Fear hasn't fully left the market, but confidence is starting to return. Gold stabilizing is a signal. Silver jumping globally is another signal. Local weakness doesn't cancel those signals, it adds complexity. And complexity is where opportunity lives, as long as you stay calm. This doesn't mean silver will go straight up from here. There will be pullbacks. There will be fake moves. There will be days when headlines say silver is crashing and days when they say it S-mooning. What matters is the broader structure. Are higher lows forming globally? Is gold holding reclaimed levels? Is industrial demand steady? Is volatility increasing instead of fading? Right now, the answers to those questions are leaning bullish, even if the path forward isn't smooth. One thing I want you to think about is timing versus positioning. You don't need to catch the exact bottom. You need to be positioned before the crowd realizes the trend has changed. By the time everyone agrees that silver is bullish again, a large part of the move is usually already over. That's why moments like this, when the market looks confusing, are often the most important. If you're finding this breakdown helpful so far, make sure you've liked the video and subscribed. It helps more than you think, and it lets YouTube know this kind of deep market analysis matters. As we move forward, watch how gold behaves around these reclaimed levels. If gold holds and continues to grind higher despite volatility elsewhere, that strengthens the case for silver following with more upside. Also watch how quickly silver gives back gains on pullbacks. Shallow pullbacks after sharp rallies often signal strength, not weakness. And finally, pay attention to sentiment. And when people are still arguing about whether a rally is real, it usually means it's early. When everyone agrees and starts making bold predictions, that's when risk increases. Right now, sentiment is divided, and that's a healthy sign for a developing move. I want to hear your thoughts on this. Do you think the global silver surge is the start of something bigger, or just another short-term spike? And do you see gold leading the next phase of the metals market, or is silver about to steal the spotlight again? Drop your thoughts in the comments, because I read them all and the discussion helps everyone learn. If you found this video valuable, share it with someone who quits watching the metals market right now and feeling confused by the mixed signals. The more people understand what's really happening, the better decisions they can make. Thanks for watching Silver Shockwave. Stay sharp, stay patient, and I'll see you in the next one.